recapping the key events we've observed this week, let's start off with the euro. It did surge on the back of Draghi's press conference. Few things to take away from that. He did note that the growth outlook is broadly balanced. He noted that the recovery has broadened for the Eurozone, and in terms of QE tapering, he's noted that they were unanimous on no specific date. However, the talks are to begin after summer recess, so in autumn, which indicates around the September time. So we did see euro surge across the board, with euro dollar really popping to the upside. Highest level seen since 2015, guys. Now, in terms of going forward for euro dollar, bear in mind the Fed did take a knockback on the back of lower inflation for the US. So this now puts euro dollar in the driving seat with eyes firmly on 120. So keep an eye on that progressive euro strength to come, particularly against the dollar over the coming weeks then. Looking over in the UK, we did see sterling dollar, or cable as we know it, give up that 130 mark on the back of softer inflation. It was quite surprising then. Analysts were expecting it to remain elevated at 2.9%. However, coming at 2.6%, we also observed drop in the retail price index, so a fall in pricing across the board. So what does that mean for the pound? Well, it's taken some pressure off the Bank of England's shoulders, because there was some mounting pressure for them to look at raising rates in order to try and cool inflation, because it was starting to cause some problems for the economy. Nevertheless, they don't need to rush to raise rates for the time being, as long as that continues to cool without any action needing to be taken from them. So cable has consequently just taken some wind out of its sails on the back of that. Looking over in Australia then, we did see some continued signs of recovery in the labour market, some improvement there. The unemployment rate did hold steady at 5.6%, but what saw some strength, or provided some strength in the Aussie dollar, was the fact that the full-time employment sector is starting to look healthy again. There are more sort of jobs added there, looking firmer. One of the main issues for Australia last year for the economy that was being a laggard was the fact that we've seen a sharp decline in the amount of full-time jobs and a surge in part-time unemployment. So that was actually consequently weighing on the Australian economy. Nevertheless, we're seeing some firm signs of improvement in the labour market for Australia. So that did, as I say, has helped with some strength across the board for the Australian dollar. Very lastly then, looking at CAD, it has continued to strengthen firmly against its counterparts across the board on the back of the move that we saw from the Bank of Canada and in terms of their hawkish tone. But in terms of look at loonie specifically, dollar CAD, it has dropped around 5% in the last 3 weeks then, guys. It has also been aided by the recovery that we're observing in the oil prices. Do note though, where we've seen such a drop, it isn't out of the norm to see a pullback before we see that extended move lower. Now, eyes are on the low 120s, but do be very aware of that potential pullback first of all before we see our continued move south for loonie. So other than that, that's it from me. I hope you've had a smashing trading week. Have a great weekend and thank you.